Welcome everyone to Admiral Markets. This is a live webinar taking a look at strategy today. But before we dive into the details, of course, as you probably know, we have these disclaimers to inform you of. First of all, the webinar is shown to a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and then contact an appropriate entity to find out more about that. Also, please be aware that trading for exchange and global financial markets is considered higher risk. It may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer, and you're also aware of the risk involved when trading. Alrighty. So thank you for your attention. Today, we're going to take a look at price action and try to basically dissect and understand what candlestick patterns and the price is informing us, what kind of communication is it providing us, and how can we interpret that and use that. Before we do that though, let's take a look. We got new home sales on the US and quarterly bulletin here from the SNB, Swiss National Bank. And otherwise some lighter news and medium news, as you can see. Regarding our heat map, you can take a look, of course, on the website yourself as well by going to analytics and clicking on market heat map, and you can find market sentiment and the blog and other analysis and the calendar, all of that right there, plus the trading platforms and the products and education. So there's really a lot to discover here when you go to admiralmarkets.com. The content as well, of course, you can see, for instance, the blog that Nenad and I are writing our opinion, just to give you an example. Regarding the market heat map, though, we can see some stocks and some indices in the green, some commodities in the red. And regarding currency pairs, we see pound weakness dominating the field with the 5 pound pairs around or below the minus 1%. And we see maybe some yens here. Actually, interesting enough, the yen did push up and didn't make really a strong downside yesterday. So especially CAD yen, apparently an odd yen, had more upside. And regarding currency ranges, of course, pound number 1, as we've seen so often, Swiss last, and dollar second to last. Kind of the same repetitive pattern right there. All right, so that's always interesting to take a look. But let's pull over the charts now and take a look at indeed that price action. And also maybe take a look at what happened yesterday and how that panned out yesterday. Pound, dollar, and pound yen were actually the best ones to the downside. Let's take a look at that. First, we'll start with the euro dollar though. Good morning, Beverly. Good to see you. If anyone has any questions, of course, by all means, I always love to hear from you and see your comments and questions. So you can use the chat for that. We try to pull over, I'm not sure, let's see, your dollar's a very small screen. It's a bit too small to, there, that's better. Alrighty, so yesterday we saw price falling to the downside of the euro dollar, but then it went to sleep and it just went nowhere. So, that was basically not really an interesting currency pair yesterday. Pound yen certainly did get that downside I talked about, and that was very interesting. But the euro dollar just really went into sleep. I was talking about looking for a 5-minute hook back and then a continuation. Well, he had the hook back, but the continuation never really went too far. Oh, I thought I had my drawing tool open. 1 second. All right, there we go. Oh, you cannot see my screen? Now it should be okay, I think. Alrighty. Sorry, I did have the drawing tool open. I was just using the wrong buttons. That's funny. All right, anyhow. So yeah, these were pullbacks and continuations, but price didn't really go far before it really got bought again, and you got this kind of channel. That was a bit unfortunate. Those things can happen. Didn't happen with the pound. It made a pullback and fell like this. So in the meantime, we see prices kind of making a curve like this. You see that? Like, I don't know what kind of channel that is, but looks kind of strange. But anyhow, um, we can see though the price is now breaking again to the downside and getting to the 38.2 fib if we put it from top to bottom, or if we still use this particular swing high, swing low, which I don't think is necessary anymore, we can see that price is now below the 50 and perhaps going to the 61.8 fib. But I don't think that that fib is really necessary at the moment. Considering the awesome oscillator now showing divergence as well, I don't think that we have to put a fib from here to here. I think that we can see that this is one move up, and I think that it's retracing that entire leg. So we're definitely having some bearish momentum at this moment. Well, not momentum, but at least a bearish channel, right? It's actually quite corrective if you compare it to these candles that seem quite big and seem quite bullish. So this is still a bit of corrective movement when you look at price action, but it is bearish, and the bearish candles are dominating. They're quite small compared to the bull candles, but they are in control at the moment. Price has pushed through that support level I talked about, and yeah, it's making kind of a loop like this. They actually call it a cup and handle, I think, is the name. When you have the curve like that, we can see it better on that 50-minute chart. This is the handle, and this is the cup, I think. I'm not sure about that pattern. It's not something I see often. But I know that if you have a saucer like that, it could be a cup and handle. I'm not sure exactly how it's, I forgot the exact information, but it could be a cup and handle as it slowly turns for more downside. It broke below these support levels, and we see bearish price action on the 1-hour chart. So I think that more downside, as expected yesterday, seems likely at this moment. You can see 3 days in a row already. So I think one more push down would not be unlikely at this moment. Let's go back. I'm crisscrossing through a lot of charts here. Sorry about that. The next support level is 38.2 fib, 111.40. Then the 50 fib at around 110.80. So those could be logical targets for today. If I look at the pivot points for today, what do we got? We are actually, we're still 7 minutes away, from the new pivot points for the new trading day. I'm still looking at old pivot points that started almost 24 hours ago. So in a couple of minutes, we'll have those levels. Doesn't make sense to speculate about that as yet. But we can go back to that in just a second. As I said one more time, for a price action point of view, I think that there's no bullish sentiment here at all. There's no clue that we can derive that this is not going to continue. Obviously, if this 4-hour candle does close something like this, well, that could be a clue that price has made a double bottom and is going to make a recovery and break that trend line. And I would be interested in longs today if a price action signal like this arrives. For the moment, though, maybe even best to wait for this 4-hour candle to close. I think that could be a good informational piece because these candles are actually not really that great either. Just small little bearish candles. The master candle is actually still this. Although we broke through the low of that candle, that's already a good sign that we might continue lower. I think it still would be good because the break has been so small, and it could be double bottom if it stays like that. It could be good to see a 4-hour candle that is something like this. For instance, decent size, close relatively near the low, look for a bit of a hook back on the 5-minute chart or whatever chart actually, hook back even on this time frame, just a retracement of that candle. And that could be a good short. I think a stop loss above that candle high should be okay with a target at the 38 and 50 fib. So I think that that is a decent plan. I don't see anything wrong with that, and I think that waiting for this 4-hour candle is maybe a safer approach than anything else at this moment. All right, so that's about it, I guess. I mean, we looked at all the time frames. I think there's really not much to add. Of course, interesting enough, the monthly candle is approaching last month's high, so it's going to be interesting to see how far it will bounce off that resistance zone that is on this chart indicated by orange. All right, so if you have any questions, feel free to let me know. Alrighty. Pound USD. Pound USD got back to that zero line, and this is a classical one where you got the momentum around London Open, just before London, just after London. You get a correction in the rest of London, and then of the New York session, you get a follow through. Those are actually trade setups I like the most because of their high probability in success. Typically, very often enough, with the euro dollar, we didn't have it, but with the pound, many times you see, in general, though, the momentum getting a follow through like this after the oscillator gets to the zero line, and you see one more push through to the next lower low. You'll easily put a fib from here to here and see a move back, indeed, to the 38.2 or 50 fib and to one of these targets. Now, as soon as price gets to the target and doesn't break the low within 5 to 6 candles, that's the sign that that particular move down is often completed for the day. And then you'll get, somewhere, if you get out somewhere in here, that would be ideal. As there, it's clearly showing weakness and it's clearly showing a higher low. All right, so it's difficult to pinpoint this spot, the exact turning spot. Sometimes it is a target, sometimes it goes through a target, so if you use the time factor rule with exiting, or that's what I do, then I get the second best spot in a way, which is often the best one we can get without over guessing and over hoping. So I think that's a good rule. In any case, back to the entry, you can see a clear three-wave correction here, a bit of a mini triangle, and a clear break of that mini triangle, and a clear turn at the second correction. Right here, this could be an A, B, C. For those that are looking for price action, something like this already could be enough. But that's a 5-minute chart. So if you're looking for maybe a bit higher chart, it could have been the 15. And a break of this candle low could have been an entry, or even the first bearish candle or the second bearish candle. Any of these, the break of the fractal, any of these could have been entries, in fact. Even this one still a bit early, the first one. But those could have been all basically, or even the fib, those could have been all entries for downside potential there on catching that pullback for continuation. Alrighty, that was that. Now, price is getting close to support. We see definitely bearish price action. We see definitely a string and series of bearish candles. And there's no doubt about that. However, price is getting close to this bottom, is getting close to the fib that we can draw by putting it on this swing high, swing low. So from that point of view, I don't think it's a good time to go short because we're so close to that the potential bouncing spot. So when we use the fib and support resistance concepts, I think the bearish price action what we see has less relevance. It has already made a strong downside, and it could continue. I just, from my fib experience, don't think it's worth it to trade it now. Yesterday, okay. Now, not so good, I think. So that's pretty straightforward from my point of view. But we do see a strong bounce off this 78.6 fib. As we said, that could be a strong bouncing spot. And that has occurred, but now we're back at another 78.6 fib. So I think that there could be another bounce up potentially. Not worth trading that particular bounce, I think. I mean, in front of that bounce, excuse me. All right. Now, if price does bounce and does make it up here, there could be a bit of a head and shoulders. And looking for a bounce back here, I think could be an interesting short of weakness and this particular reversal pattern. All right, so that could be interesting. Even maybe looking for a bounce here, I don't know, it could still be okay. Maybe if the 4-hour chart does show any sign, for instance, like an engulfing twin like this, that could still be an interesting price action or an interesting candlestick pattern, right? For engulfing twins or even a lower at the 88.6 fib, a pin bar, for instance, right? Those could all be price action candlestick pattern signals that could conclude or indicate that price is bouncing. So those could be things to look for when they happen for actually a bullish bounce, a reversal trade. That I think has probably more value than looking for downside, despite the bearish price action. Now, as price gets back up here, as I said already, then of course we could use the same concept, but for the other way, a bearish reversal back down, potentially. So I think a 4-hour chart is a good chart for that. I don't think lower makes sense for hunting for reversal. I don't think that makes sense. To the downside here, right, where price was at the 78.6 fib here, there was not really a great signal. There was a doji here, and then a bearish candle, and then we had, I think this is, let's see, yeah, that was the weekend, and then we opened with the weekend, and before you know it, price was already here. So that was difficult to catch this turn. But a continuation yesterday at the break could have been one way of doing it, or at the pullback, that could have been another way. All right, we can see on the weekly chart, I mean, we can look at all these time frames, of course. I don't want to bore you too much, but we had a couple of bullish candles here. We're getting back to the low of that. We also had on the monthly a lot of bearish candles, so there's a bit of a mixture, and we got back to the high of that last month. So you can see prices caught in between resistance on the monthly, caught also still above the support. So it's in a bit of a battle here. It's in a bit of a tough spot with ultimately a strong trend going down, but also a very strong retracement. So that's not an easy battle. And let's see if price is able to break through it. Well, it might be the continuation. If it bounces here, we probably see a recovery rally to at least this spot. Okay, so let's see. 4-hour chart, I think preferred method, and seeing if we have any reaction here. Next one, dollar yen did not do what I wanted. It had a weak close. In my opinion, this is a weak close. It was close, but it didn't close, first of all, below the 21 EMA band. It did have a turn on the 8 EMA, but the close, when you look at the candle, look at the high and low, is about 80 pips, and the close is about 33 out of those 80. So that means 40% of that candle is wick. And yeah, I don't think it had enough strength to be a good breakout candle. So it was definitely close, and well, if anyone took it, then I can understand, because it was very close, or it definitely had the 8 EMA turn. It was not total 50% or more wick. It was still 40, still less than the 50. So it was a kind of a mixture here, gray zone. I didn't like the fact that the 21 EMA was not broken below, and I still thought that the wick was too big. But those can be a bit difficult calls, especially in real life trading. Now then we had a doji, so that could have been a bit of a warning, but maybe not. That depends. And then price moved up, and then it was too late if anyone took it. So now we're back in the situation that price is retracing higher and getting close to the 61.8 fib, which could be a turning spot in my opinion. So if anything, I would look for bearish candlestick patterns as it gets to the 61.8 or hits it, or even higher. Right? Any of these fibs, if I see a good bearish candlestick pattern, I think that could be a turning spot for more downside. The alternative would be if price manages to break below the 21 EMA band and probably hooks back to it and continues. But that will take a while, I think, for the moment, because this seems the most soonest trade that could be available. I think the price is kind of pushing up here at this moment. Any of these fibs, if it turns, I think could be a good candlestick pattern. Alrighty. Quickly to the euro dollar, we got new pivot points as I said, so let's take a look at that. Price is opening below the pivot of 112. And the S1 is 1165 and an M1 at 111.50. Quite tight pivot points, I think. So there's not a lot of space, but might go to 111 then in that case. That's the S3, which is really, it's about 88 pips, okay. So maybe 111.40 is the S2, and it's the 38.2 fib. That might make the most sense. 111.40. Confluence between S2 and the 38.2 fib. All right, pound yen. Same story. Let me refresh this. Hang on. All right, same kind of pattern as the pound, a three-wave correction, and then the turn and a break of this low, and then failure to continue here, and we got a bigger correction after that. All right. So price has been moving up now at this moment and has gone kind of sideways like this. All right, let's zoom in here to the 4-hour chart. And we see an interesting development. Strong bullish candle dominating after a strong downside yesterday. And weak candles going sideways. So it's a bit of a mixture here, I would say. And this doesn't really look that neat. I think that I don't see anything particular that I find interesting. Maybe if price actually gets up to these fibs, I think it could be good to look for shorts actually. We would be retracing this candle. It still hasn't been retraced. It's a strong candle. It's a recent candle. The trend is down because moving averages are aligned to the downside. We got clearly lower highs and lower lows. So as price gets back to resistance, I think that could be still a good turning spot. So for pound yen, I would be bearish, but not now. I would like it to, as I said, reach one of these targets and show, maybe even on the hourly chart, show bearish candlestick patterns on the hourly at these fib targets on the pound yen. That I think makes sense. I think there could be a zigzag looking at this particular momentum right here. And this correction, I think a zigzag up to those targets is pretty likely, and it's also pretty likely that price will turn at those levels. All right, so that's the pound yen. Now I think that the euro yen is less neat its upside was very dramatic, very strong, and shows that these moving averages that were kind of aligned and flat like this, that when that happens, you got to be careful, because look at that reaction. It tried to pull away from those moving averages, tried to distance itself, and it gets smacked right back in it. Right, price just can't escape, can't move away from that, and it's like gravity, and price is attracted back to the average. It happens very often, as I explained in the webinar last week. Perhaps you were there. That on moving averages, that when the moving averages are flat and there's no momentum, that it's very difficult at first for price to move at all away from it. And many times it fails, and it just doesn't get, doesn't pull itself away from it, and it gets gravitated back to those moving averages. And that's what happened yesterday with the euro yen. And I think I should have made that more clear yesterday, in fact, because I was talking about those moving averages, but then I forgot about it. And then I mentioned all four currency pairs as good continuation pairs. But actually, the two best ones were pound yen and pound USD. And now price is back right into those moving averages, and I'm not interested. Same story, basically. All right. So those are some of the majors. Let's take a look at quickly at some other pound pairs. Beverly mentioned pound Swiss. We can do that, and New Zealand yen. We can do that too. And what indicator to anticipate the breakout direction? Well, there are different ways to do that. How I do that is I look at price action. So, for instance, if there is let me give you an example here. There is a impulse here, right? And there's a correction here, a triangle. So my anticipated direction was up at the time on the euro dollar, because I was looking at price action and the flow of momentum and correction. And when I see up, bullish momentum, bearish correction, if there's nothing on higher time frames that could indicate that there could be a bigger bearish reversal, the logical thing in that case would be to think, okay, bullish continuation, unless there's something else going on, unless there are other clues that would say that this is not likely this time around. Euro dollar didn't have that. It still had a lot of space to resistance, so bullish continuation of that pattern was likely. So that's one way of doing it. You can use trend lines, therefore, put them on both sides and wait for the break. If there's let's say sometimes there is momentum on both sides, and then or correction on both sides, and then in that case there's not really one favorite, let's say. And don't get me wrong, just because there's one momentum. Let's say there's momentum here, and we have a triangle, right? The downside is a favorite, but as I already said before, actually, you never know. If there is some strong level here, it could break to the opposite side too, right? So having trend lines, therefore, and putting them on both sides and seeing if price can break through one of those trend lines is one way of doing it. Sometimes you get momentum on both sides, and then you get correction, and then you get correction. So what is the breakout? We can put trend lines like this and wait for that. The dollar yen had that. Here a trend line, and here a trend line, right? So now the upside break I was not interested, but the downside break was interesting in this case. Other things could be moving averages, for instance, a break above or below moving averages. Now with the euro yen, maybe not, because the moving averages are flat, but alrighty. AUD I was a bit leery of that downside yesterday already, because I thought that it was going back to support, and indeed the 50 turned out to be a bouncing spot, but that is not a trade I would consider to be possible to trade unless you're really lucky. I don't think that is a doable trade because of yesterday's news events regarding the bombings in Brussels, unfortunately, and The reaction to that was volatile, so as a trader, I don't think it makes sense to anticipate any particular trade at that point that is counter to that momentum. So I don't think that makes sense. But I think that the odd USD, after it settled above the moving average here, there could have been some up trades to be found, perhaps, to the upside. I didn't do it, but I think there was some way to do that. However, the break has been choppy. It has not gone all too far, which leads us to basically to conclude that a wider range is still intact on this odd USD. So I'm still sitting on the fence with this particular pair, whether we have a momentum here and a continuation, or we'll see this momentum and this break still. I don't know. Let's see. Moving on to some other pairs like the pound Swissy. All right. This is a break that occurred about a week ago. And then we got a pullback to the trend line and a continuation. And we're approaching this bottom. All right, but I want to focus more on price action. So let me use a simple template. Well, certainly all of these time frames are bearish. When you look at all these candles, it's one bearish candle after another. And if there was any doubt about the continuation, then these two candlesticks, I think, would have been a good signal for a turn at a resistance zone anyhow. That could have been something to consider at that time. We've got a bit of retracement of that candle and a continuation. That's a good example of a nice retracement of a bearish candle and follow through. So we had a couple of bearish candles, continuation after that, and price is now retesting the bottom. And I guess you already can maybe guess what I'm thinking is that it's a great down move, and there's downtrends on all time frames. But it's right at this bottom. So it's, from that point of view, not the ideal spot to go short. Better spots are somewhere around here probably, right? Or even on the break, or even on this pullback. Now, with the bottom so close, I'm not too sure if this is a good spot. Now on a 4-hour chart, there is still some space. But not a lot. I think for me to be interested, it would have to probably retrace back into this little zone here. There's a bit of a pause zone here. You see that? Momentum, pause, momentum. So a zone like that is great for looking for bounces back down. There's a moving average as well. Some bottoms here close by. So if price makes a zigzag, like actually the pound yen, right? Same story. So if the pound is able to make that come back here and able to make that bounce, and pound USD could do that too, right? Because it's close to the 78.6 fib. After it finishes that rally, I think that we could get into an interesting resistance zone. That could be very interesting for that downside. Be retracing this candle. And basically retracing yesterday's bearish candle. Well, that doesn't seem too much to ask for. I think that's a decent demand from a trader to get a bit of pullback, especially in face of a support level like that. So I think that makes a lot of sense. Let's see. Beverly is in the pound Swissy short from about a week ago. and wondering about whether to target the previous bottom or use the Fib extension target. Got it. Good question. Excellent question, actually. And there's never going to be, exact answers to that. But considering time factor, I think a break of the bottom is a decent thing, because I'll tell you why. Because when you look at the monthly, we got lower lows, and last month was a strong candle. If we look at the weekly, this is candle number 4, still in momentum. When we look at daily, this is candle number 19. And 19 is well past 13, past the corrective zone. So I think after the retracement, we might get a pretty good chance of getting a continuation of the break. But I think that it wouldn't hurt, I think, if I were you, to put it above that yesterday's high. If that's at break even, then you have nothing to lose either anymore. So I'm not sure if that is, well, you said a week ago, so that probably would be already a break even at least. If not, maybe in profit. Let's see, a week ago would be 16th. That could be around break even, probably, indeed. So I think there's a fair chance of that bottom break. If it breaks that bottom, let's see. Well, that's a very wide target, but I mean, it could go down all the way to the minus 61.8, but I don't know if you want to hang in for that long. If we use a closer target, maybe this swing high, swing low, minus 61.8 could be 134. Great. That would be some profit. Great. I don't know if it's crowding the trade too much. You might also want to go above this fractal here. That could be another way to give it a bit more space. I don't think it's a bad spot though. But it really depends on how aggressive or passive you want to be in this trade management, and whether you think that this is a strong dominating candle or not. I think it's not bad. It's not the strongest. It's not weak either. So it's a bit of a decision. It's a coin flip here. I would say it's an okay-ish candle to use, I think. Yeah, I mean that's nothing wrong with giving it a bit more space and using the fractal. I think that is an equally valid approach indeed. All right, New Zealand yen. Bit of a mess when looking at the moving averages, but let's see if we can find something. Doesn't get much clearer when looking at these candles. You see all of these candles are giving conflicting messages. One is bullish, then one is bearish, one has a wick, one has a bearish wick, the other has a bullish wick. So that's not really saying too much. And that's all because it's in a triangle at the moment. And the weekly, you can see it doesn't seem to escape that vibe. Let's see, 1, 2, 3, 4, 5, 6. So no, I'm not sure. Do you have any particular entry you would like to look at, Beverly? I think if anyone is looking at this pair, these two trend lines probably just the best way to analyze it. A breakdown probably still seems more likely this week. Next week I'm not sure, but this week probably more likely, if it happens this week. So from that point of view, we're close to resistance. So if it pushes up just a tad, if it gets up maybe into one more time into this zone right here, roughly, that could be still a short to look for down to the bottom. But that's a range trade, and it's a bit messy pair, I think at least. But all right, so that's my 2 cents. All right, let's take a look at the Kiwi. Let's see, Judy. Yeah, that drop I think Beverly does make sense, but let's see if it happens this week. I mean, if it does, I think it could be interesting. Let's see, Judy lost sound, but is back now, and we looked at the Aussie, but not at the Kiwi yet. We can take a look at the Aussie again, no problem. Just briefly, anyhow. Kiwi, I really not a big fan of the Kiwi at this moment. But that's just the way I look at charts, and if the Kiwi starts behaving, or if any price action starts behaving as the Kiwi does, I really kind of lose interest in it. But there are some traders that like it because it's behaving this way. It is moving maybe slower and choppier and more range bound, and some traders like that. So, Judy, if there's anything specific you're looking for, let me know. But from my point of view, I would, when I would not be having, this webinar with you, I wouldn't even look at it just right now. I wouldn't even analyze it. I just set it aside. But if we're analyzing it, then we could have triple top, and this could be a bearish reaction to it. But there are a lot of candles here and a lot of mess, a lot of support levels perhaps as well that could stop price. Very easy, simple rule always when looking at charts is look left, see what's directly left of it. And if you have a lot of candles or if you have a bottom nearby, that's one thing to consider as a warning. You might not want to trade into it, or maybe you would like to trade away from it. Now, I wouldn't like to trade away from it either to the upside because we had triple top and there's bearish price action on the daily. Trading it to the downside though, so far not looking that attractive either to me because so far the downside candles, the bearish candles have been quite choppy. And it's quite a mess here on the 4 hour. There's no real trend. We got bullish momentum. I don't see any trade that I find interesting. The only thing that could be interesting is maybe if price finally does slowly get down here, hits the support level somewhere in here, we see bullish candlestick pattern, that could be a bouncing spot. All right, now you might say, Chris, how about this particular downside? Would that be worth trading? And it might be. It's slow, but so far we did break this little triangle right there. Let me put that on. That triangle right there, we had bearish momentum before that. Then we got into this triangle, and now we broke through that triangle. We already hooked back to it. So that could be worth it. Maybe a good approach could be, got moving averages close by, but I don't think they're that relevant. I think if we get a good 4 hour candle here, that could bearish 4 hour candle that closes, maybe we need at least, I think, a candle with the size of about 50 pips at least, I would say. 50, yeah. If the candle itself is 50 pips and the close is near the low, maybe look for a pullback and a follow through there. So if I'm pressed to give kind of my view on how to trade it, I think that's probably the best way. Now, would I do that? I really don't think so, but it could be a way to approach it. If it becomes a bullish candle or a doji is caution, stay out, I think. And if it's a bullish candle that totally engulfs the previous one, that could actually signal more that the price is ready to move up. I'll keep an eye on this 4-hour candle. Aussie, same kind of indecision. We had yesterday a drop, bounced off the 50 fib, recovered, and made a small push, but not too much, and then turned around again. And well, not too sure about this one. As I said, actually, the first time, it looks, I don't see anything to change. It really looks like a consolidation. This is a range, is a mess. This price is going sideways. If there's a bounce, if I see bullish candlestick pattern at the 61.8 fib, or again at this bottom, I think it could be good for a potential long, potential long there, and see if it can make one more rally. This could be a correction like this, and we get a bounce. Or this could be a correction, and we get a bounce. So that's still possible. Now, right in here, I don't see any trade. If it does push above this resistance trend line with a good candle like this, I think a bit of a hook back and continuation is okay. If we get a good bullish candle like that, I would not be, at least for the moment, not worried about this top because we are in the upside. And I think that if price continues to push up within 5 to 6 candles with higher highs and higher lows, I think there is still a good chance of a continuation of that. And bullish candle like that would probably signal that. So probably ultimately more bullish, I would say. Where would I get more bearish? If I see price hit the 61.8 fib and make a bear flag like this, well, then it's probably going to break lower. But right now it's in the indecision. Let's see, pound odd. Alrighty, still around 186.50. Last couple of 5 candles just going sideways below this bottom. And Beverly still holding on to that trade. And it's been now 3 weeks or so. Way back when she was, when I was talking about a 200 target, and she's still in that trade at 186. Amazing. And we'll look at this fall. I'm not sure where Beverly took it, but wait, that's been more than 3 weeks. Have you been in that trade for 5 weeks? I'm not sure, but it's very lengthy in any case. Wow. And this has kept pushing and pushing. Amazing. Excellent job. And 40 days. 40 days. Wow. And what a run that Beverly has managed to catch. 40 days brings us back to February 16. All the way here. All the way here, folks. 202. Now 1,600 pips lower at 186. And what a fun acceleration on this daily candle. The daily chart, sorry. With the entry when the price broke the 21 EMA, for instance, and that's when the 21 EMA actually started to accelerate. The price started to accelerate and pull. February 11, wow, February 11, all the way here. Actually, when price was still in the 21 EMA, price started to pull away, and has been from the EMA and has been pulling the EMA with it. 204.70, almost 205, which is close to 2,000 pips. Wow. That's amazing stuff. Great job. Really excellent. And that's sometimes, the benefit of having the patience to stay in a trade that amazing. Because if you manage to get one of these trades a year, if you manage to get something even half of that once a year, or even a couple of times a year, that's so amazing for the equity curve. Because hitting 1-to-1s, 1.5-to-1s, it's okay, but this really gives that boost and helps a lot with accelerating it. Shouldn't be the only thing we're looking for, but occasionally managing to get those is really helpful. I can imagine. Beverly saying it's the trade that she had the most patience with and ever managed to apply, and I can imagine. And it does need a lot of patience because you got to really keep your head cool with that much profit really on the table. And it's easy just to say, okay, this is enough profit for me. And that's very alluring, very tempting, very easy to do, um, and feels good when you do that. And then later you see it falling and falling, and there might be, of course, a bit of regret after that. So managing to stay in the trade like that is really, really, really difficult, but well worth it once you see it. This once it happens once, once it works out once, and you manage to do it once. Every time after that, it becomes easier and easier, though. Because once you applied it, it kind of you get the experience in it, and you see how it can work out, and that experience gives you more ammunition and more strength to do it again, and you kind of build a routine in being able to manage a trade like that. Now, once is not necessarily. I'm not saying that after that one time it's easier, but my point is that once you have a blueprint for that, the second time does a tad become a bit easier. And every time it works, it becomes next time a tad easier. And every time, it just simplifies things and it becomes more routine in a way. So at this moment, we had a correction up to the minus 272 target. We talked about that as well, if I remember correctly. 16, 17, yeah. And price did get to the 272 target, then started falling again. And now it's retracing back to the 21 EMA. So let me get rid of this fib. I wanted to show you that it hit the target. And it seems very likely the price is going to hit the 21 EMA band and turn around for one more fall. So I would like to see price just make a bit of more retracement here. And then I would like to see a fall. That's the same like the pound USD, pound yen, pound USD. A bit of retracement to the upside and then a turn back down. And one more fall I think is likely. How far can it fall? Well, we can put a fib on this most impulsive part and look for the 272 target at 185, and that could be a spot to be careful of. Alrighty, dollar CAD hit the minus 272 target, is retesting that target, but looks like it's a point of reversal back down, I would say. So I do think that's a decent short. Stop loss could be above the minus 61.8 target or above this. Now, there's always a risk, of course, the price can still bounce off this trend line and hit this target. So that makes this, number one, riskier. If it breaks through the trend line, that could be a good short too. Then putting a stop loss here at the third spot is also an option. Looks bearish to me, and it looks like a continuation ready. Hit the minus 272 target, bounce off of it, and if it breaks, I think that we could see the continuation of the downside, and this was just retracement. Now we do have divergence on the 4-hour chart. We had it at least. Now we had a significant fall, so I think that you do want to be careful as it pushes it for a new lower low. All right. Other than that, let's see. Euro odd looks still nothing. Euro New Zealand doesn't look interesting. Pound New Zealand, well, still is divergence, and I'd still be cautious with this one. All right. Now, any other pair you want to look at and time frame, let me know. And I would like to ask one of you to choose a currency pair I want to look at for price action. So I want to hear from you. Are there any pairs you want to look at? And second, for the example I want to discuss with you, can you give me an example pair? Okay, euro pound, is that one you want to discuss or you want to use it as an example? Wait, let me go there. Euro pound, let's see. Euro pound, we talked about it yesterday and said that upside seems likely. Um, Considering the moving averages, and we broke above these fractals and got a bit of a push up, right? So that happened. Now price is back at resistance, but the trend is up. So it's looking at the price action here, this is a strong candle. That's still dominating. This is the fourth candle not breaking this high. And price is making a consolidation box here, which is actually kind of at the moment uh, a basically a continuation signal. We got momentum sideways, and we should expect follow through. Now, what makes this a bit different is that there is resistance close by, major resistance, because we got a couple of levels here to work with, and that could be something that sends us back down. But how much? Because if you look at the daily chart, we basically have a pretty good chance of breaking these highs. And the reason is that there's no divergence, and I think that breaking this top is still a good chance to get that divergence. So ultimately, the downside here might just be a smaller retracement of that bullish candle before we find support and do push up higher. Looking at yesterday's candle, that's a strong bullish candle. There's nothing wrong with that candle. There's no signal of any danger for upside at the moment. So this resistance might cause a bit of retracement. Ultimately, if it stays above yesterday's high, I don't see any reason for a big reversal though. So putting a fib on yesterday's candle, I think either it stays above the 23.6 fib. Well, if that happens, it's very bullish. If it retraces lower, then basically any of these fibs could be a turning spot. So I'm personally not that fan of trading it to that downside. And that's my 2 cents though. Alrighty. Let's take a look at, let me choose a pair then. Great. I'm happy to hear that, Stefan. That's exactly the goal I hope to achieve. So that's great. Why don't we choose odd New Zealand? I don't know. I just pick a pair. All right. Now, what I wanted to look at was trade management, but looking at price action and trade management. Um, I don't know how to do it. Well, my point is, what I wanted to say is that the concept of a strong candle is great for trail stopping. All right. So basically, if you, especially a 4 hour chart, I find this very, but maybe other charts too. For instance, if you take a short somewhere in here, right? How do you manage that trade? If you wait for strong candles, but they have to be sizable for that time frame before moving the stop loss. Um, these two candles I think are could be used, and then in that case you'd be unlucky and get wicked out there. But are on the smaller side, right? So any candle like this, these candles, indecision candles, don't use them for trails that often, unless you really think that the target is nearby and you want to get out. That's fine. But if you think there's space, don't use them because they're too small. Those highs don't have the same importance. This one is probably okay. You see, it does get respected. And all of these candle highs, this is a specifically strong candle. This one is small, but the next one is strong, so you can use that as a high. I think that this one is small. This one has a wick, so probably still keeping the stop loss here is best. Then we have a doji and a decent candle. I think moving the stop loss there is fine. Then we get a small candle, but a bullish candle. Now that bullish candle could be a bit of a warning. It's a pin bar. So moving a stop loss then in that case above this candle I think is okay. Or just leaving it there. Both are fine. You get taken out at these two green levels, whereas the entry could have been up in here. So that's how you can use the concept of a strong candle for trade management and trail stops. All right. So if someone takes this engulfing twin here, for instance, these candles are not really good for trail stops. Neither is this one. But obviously this candle is. That's a strong candle, dominant candle. We can use the high of that candle. The next candle will probably be this one right here. All right, because the other ones before that don't really are not very convincing as a direction. And sometimes the master candle does get taken out. This is the dominating candle. Anyone who takes a short up in here or the break, right, could use that candle as a trail. And price gets stopped out at the master candle. Not always, is that one a guarantee of a follow through, but often yes. If you get a strong series like that, but not one of them is the master candle is really a significant impact on the market, then you still might consider using those highs. In that case, going two candles back is often the best. So if you, for instance, have a series of candles like that, often like 4 or 5 at least in a row, right? So let's take 1, 2, 3, 4, 5, right? So then you want to go two candles back. So after this candle, you want to use, this is the zero candle, you want to use 1, 2, and put the stop loss here. After this candle, you want to put the stop loss here. After this candle, you want to put the stop loss here, just a tad lower. Right? That's one way of doing it. Then after this candle, you want to put the stop loss. You could put the stop loss here if you want to keep that count. It is a bullish candle, but that's okay. You can still do that two candles back. That's one way if you want to use a tight trail. You can also use fractals. In that case, you get a fractal here and you can use that as well, of course, if you have a bit more patience with that. So that's one way you can use price action, not only for entries, but for trails as well. And if we take a look at the pound out, I'm not sure. Maybe we can look at Beverly's example. Beverly, what time frame did you use to manage this trade? I think that it could have been a daily almost. Yes, daily chart. I thought so. And if you look at this daily, look at the candles. I'm not, of course, sure how Beverly trailed it, and it would be great to hear from her directly. But and the trade was taken from the daily chart as well. All right. So, but if you use this master candle concept at least, right? Then let's see. Obviously, this is a strong candle that could have been used for trail stop, and this sequence down Uh, yeah, I'm a bit hesitant. This one I think would have been okay. This one not, and this one would have been okay. So if we use the highs of that candle, and it doesn't have to be exactly at the high, it could be, of course, a few candles. You can see that it just barely survived this pullback, for instance, but it did. And then so you could use basically put the trail stop here, then here, then here. Now these couple of candles are too small, I think. But we do get I think, an okayish follow through, perhaps here. This is a candlestick pattern, I would say, even, so that could be qualified as well. It's not a strong candle, not a master candle, but it could be a bit of perhaps a bit of a wick here. That could be used as well, perhaps, or the next one. Now this one not. And here we have 5 candles in a row, so you can go 2 candles back, which means the trail stop could be here. In that case, perhaps, right? Or here, somewhere in here that's possible. Now, let's see, we got a bullish candle, we got a bearish candle, nothing's very significant there. And with this pin bar, I could have been worried with that pin bar, and Beverly was not, so managed to stay in that. That would have been a bit worrying for me, and maybe from that point of view, could have even put the trail above it, but that would have been too tight, as you can see. I think that at this moment, this is the master candle, and the trail could be above that candle high. But in this section here, there's not really a strong candle. So if there's not a strong candle, the stop loss could stay at the original high, or one could use the fractal indeed, like that, to keep that trail right there. Beverly is giving us more information about that. Every time there's a high fractal, I move the trail to above that fractal. 2 days after its post might be a strange system. Move the stop after it's pulled away from the new fractal. So I think what Beverly is saying is that once a fractal is on the chart, she waits 2 more days before moving it. So on this day, on day 2, the fractal is present and will not move away. And then you wait 2 more days, 3, 4. So at this point here, you move the trail to this spot. Is that how you did it? And then you had here 1, 2, 3, 4. So at this moment, you move the trail to this fractal. Is that how you did it? Basically, Beverly was using fractals, just the question when. I think she used it. But fractals is, especially if you have momentum going your way, is an excellent method, especially on higher time frames, like 4-hour daily. I think on 15-minute chart, it's not bad either. It's just that you're gonna see. I don't think it's bad. It's just you're gonna see breaks of that fractal occurring quicker. So with that logic, at the moment, the stop loss for Beverly is somewhere around here still. Because this is not a fractal that has been confirmed. Why? Because we need 2 days. This is day 1, this is day 2. Today is day 2. Alrighty, so very interesting to get more info about that. And this is how you can use fractals, but also candles, I think, for some trail stops and maybe squeeze out one of those bigger wins that Beverly has managed to do. And for instance, so I think that this is one way of doing that. And also, of course, let's see, you need to see the opportunity for a bigger move. That's sometimes not easy, but you could use, for instance, the Fibonacci sequence levels for that. Let's see if we put Fibonacci sequence levels on it. Let's use. Sorry, that tool, the script is causing a problem. Let me reopen that. Alrighty, let's go back to, sorry about that, let's see, where was it? Pound on. Anyhow, all those changes are gone. Okay. Anyhow, point is that you can use that, the Fibonacci sequence levels. Let's see how far it has fallen on the daily chart. I can just measure it very quickly here. About 2000. So from a sequence point of view, this has really, really accelerated. But we can already have a sense that it could maybe be falling further, especially, I would say, after this pullback and continuation. Here, the momentum was very rapid, and you're getting into a continuation of about, here it's about 740 pips. So when you pass that 630 mark, the 630 pip mark on a daily chart, that's often when you get the acceleration, according to the Fib sequence levels. So, and that's what we see right here. And if you're lucky to stay in that trade still when this develops, then all of that momentum is just going in your way. The problem is if you're not in that trade, it's more difficult to get in after that momentum burst has happened, because then sometimes divergence creeps in and it just becomes less desirable because we know that the space is becoming smaller and smaller. Now, with this particular pair, it still moved quite a distance, right? But just mentally, it becomes more difficult to find still an interesting entry point. Alrighty, let's see. Pound yen, maybe it could be interesting too. Last week we talked about price action, candlesticks, candlestick patterns for entries. And you can see that just using engulfing twin here could easily be used for a trail, engulfing twin, trail. Now these are not strong candles, so that could be just keeping the trail where it was. But here again, engulfing twin, strong candle, engulfing twin, and you get knocked out probably here. That's a bit unfortunate. Kind of happened, obviously, logically. If an re-entry was done there, trail stop could be here. But if you got a couple of candles like that, there's nothing you really can do. This was still a master candle, and unless 5 candles, 1, 2, 3, 4, 5, an exit on this doji, but you're not gaining too much. An exit here or here, just a tad difference. Alrighty, this is the master candle, so trail stop there, but this is nothing, so no movement there, unless you're really scared of this pin bar. But otherwise, keeping it here makes sense. And then we can move it here, engulfing twin. This is an okay candle, a bit small, but could be used, but that's a doubtful one. Let's see. Probably here is okay. This one is for sure okay. Here. And then we got 5 candles in a row, small candles, so we can use a 2 candle back. So this is 0, 1, 2. And eventually we get knocked out 0, 1, 2 with the candle trail about here. All right, if one takes this reversal trade, we did talk about it. Strong candle is here, it's here, it's here. Probably get knocked out after that. A new entry could mean a strong candle here, here. Not this one, that's a wick. But this one certainly yes. This one too, not these. This one, coin flip, maybe. Not sure, not these, not these. Maybe this one. This one for sure. Alrighty. Oh, sorry, folks. That's my cat. She wants to say hi and introduce herself. And she's also interested in trading. A very good trader. Likes to jump on the keyboard, and somehow she always picks the right entry. I don't know how she does it. Let's see. Beverly. Yeah, she wants some attention. She's annoyed that I'm looking at this screen. So let's see. I'm kind of hoping pound Swiss trade may work out a little like that. Going to try and manage in a similar way if it develops. Ah, yeah. Okay. Gotcha. That would be very cool. Let's see. Pound yen now hardly retraces after recent drop. Yeah, I think that if anyone is in a short, then I think the recent candle, I mean, that would be a lucrative candle to use a trail stop. But I know that from analysis, we said there could be a zigzag up to these targets. So, from that point of view, a trail still here could make sense. Yes, I would like to see downside, but I would like to see retracement up to the targets, -27, -61.84 follow through. That's what I would like to see indeed on this pound yen. Now, anyone who used that master candle concept here on this downside would have had the stop loss above this candle, this candle, this candle, this candle, and eventually this candle. That would have been knocked out then. At this moment, it could be either this one or this one. It really depends how much risk and how long a trader wants to stay in that. All right, so this is just a couple of ways how I think we can use candles themselves and their interpretation of the highs and lows versus the close. How big is the candle size? How is the candle in relationship with other candles, right? If we have 5 in a row, for instance, it might be worth being a bit more cautious, or even using fractals if you really want to give space. Look what you can do with that just using fractals. There is a bit of risk with fractals because often enough you give a lot of space. So if it then turns against you, you're going to lose a decent amount of that profit because the fractals can sometimes be very far from price action. But if it keeps running, you got an upside as well. So sometimes using a mix of those, one part going for a smaller target, one part going for a very far target, is an interesting combination. Alrighty, folks. Well, if you have any questions, still let me know. In the meantime, we got webinars tonight with Nenad looking at Murray Math at 6 p.m. Central European Time, 5 p.m. UK time. I think that Nenad has a bit of a mistake here. He wrote 4 p.m. GMT time. I think that is an error, but and yeah, tomorrow for sure 6 p.m. I'll talk to him. So be aware that this could be an hour later than it shows here. So I'll check with him. But tomorrow we do have the usual time, 6 p.m. How to handle your fear while trading. So I hope to see you then. And wish you all great trading. Cheers, folks.